Hey, everybody, welcome back to part two of Top 10 Reasons Why Whole Life Insurance Sucks. So, this was a fun episode, Paul. We got into the last five reasons why it sucks, according to a popular blog that we alluded to in the first episode. So, I mean, the things we cover this week is, the tax advantages are oversold. They're not as good as, they make them out to be, and they're really no different than any other plan you may have for investing. And oh, you get negative returns. So, that definitely is that definitely sucks about whole life insurance. What else do we cover, Paul?
Yeah, it's this article still annoys me. But yeah, so we talked about low returns, how the cost of insurance rises, and how, you know, as whole life guys, we're comparing, the qualified investments aren't that bad. But anyway, you guys listen to our podcast, but yeah, we had fun during this one, and these are triggering articles, I would say, Dave, because they're just baked in half truths
And flat out ignorance,
and
really.
ignorance.
And
Yeah,
I think
it's
everybody here listening who's got any education in the infinite banking concept will be able to spot this themselves, which is really what this is all about. Is you getting educated to the point where you can spot a lie, a half truth, or a misconception when you see it.
I'll just say this: the use of the word returns tells us everything we need to know about these people writing these articles.
Yep. And if you've read page three of Nelson's book, Becoming Your Own Banker, yeah, you'll know why.
That's
So,
right.
all right, everybody, enjoy. Hey, I'm Dave,
And I'm Paul.
and this is the Wealth Warehouse Podcast. All right, number six, the tax advantages are oversold. Just just the title there alone implies that there are tax advantages, actually. Let's not talk about all the great tax advantages.
Well,
Let's talk about how
and
they're
he,
oversold.
yeah, and he lists them.
He does.
Yeah,
Tax-free retirement income, tax-free income to your heirs.
Right.
Okay, there you go. He said, well, agents aren't lying, but they're misleading on what they're not pointing out. And then what he does throughout this entire section is compare whole life insurance to everything else in the world. Your 401k, your house, all of your IRAs, your pension plan, annuities, etc. And basically says, oh, well, all the advantages you get from life insurance, you get in these other assets too, which couldn't be further from the truth.
Right. He gets into in this item one. He gets into um, the dividends. But he's saying you get this in an annuity, a 401k. Right. He's not comparing like things
Right.
at all. And that's like those are things that will be taxed. Not the Roth, but everything else he named there. Annuities are
Right.
taxed. 401ks taxed. I don't know what he's talking about. Your home, like appreciation.
Yeah.
Or
Well, he's
something.
talking
I'm not
about
sure.
tax protected growth. So the growth of your cash value is tax deferred technically, but it's actually accessible tax free. And he
Sure.
compares this to, hey, all this other stuff you're doing, it's tax deferred growth too. But the difference is all that other stuff, when you take that money and spend it, you have to pay taxes on it at that
That's
point.
right. That's right.
With your whole life insurance cash value, all that growth, you can borrow against it, spend it, and not pay taxes on it. How about that?
Right. And you have no idea what the future tax rates are going to be, right? You have no
Yeah.
idea.
Yep.
So, yep.
Yep. He also says you can borrow against it tax free, but not interest free. Okay. Of
Well,
course.
you're not borrowing. Well, okay. Where can you
But
borrow money interest free other than
exactly.
these like, hey, 0% for 3 years? Like, yeah,
Yeah.
but you can't afford the monthly payment anyway, so you're gonna have to borrow with interest at 7. So for your car, for
Right.
example.
Yeah. So yeah, tell me, where can you borrow money without interest? Unless you're Muslim and they don't believe in interest, you're not going to be able to borrow money without interest. So, and he says, again, this is no different from your 401k, your house, your car, or even a collection of mutual funds in a non qualified account. Really?
That's
You
not,
can,
yeah, so that's not true.
I
Unless
want
he's
everybody
talking
here.
about, it's not true, regardless of, yeah, that's not true. Like, I've got a couple 401k loans out. I've had them for the last several years, and there's an interest payment on it. And it's a payment that I don't control. It gets deducted from my Army check
Well,
every
he's not
single
talking about
month.
the interest, though. He's talking about the
Oh, I'm
fact
sorry.
that
He's talking about just borrowing against it tax free.
you can
Okay,
borrow
got
against
it.
it, period. So you're telling
Right.
me for anything and everything you want, you can borrow against your 401k? Or you can go
No.
get your home, you can access your home equity for anything and everything you want. Or
Right.
your collection of mutual funds, you can go get a loan against that for anything and everything you want on favorable terms. Really?
No, your 401k like it has a defined payment. Like that starts the next month after you borrow that money.
Right. It controls the terms. Yeah. They control, yeah, absolutely the terms.
In fact, every other leveraged position in the financial world minus the life insurance policy loan is going to be like that. The life insurance policy loan affects the most control, right? You get to be the kind of the borrower, the banker, and the loan officer all in one.
Uh huh.
No other position you're going to find that. So I don't. Yeah, he's. It's a short paragraph. Only two. It's only two sentences.
Yeah. And then he talks that, tax free death benefit. Like that's just, that's, that's hardly
That's
even,
nice.
it's nice,
That's
but it's
nice.
not necessary, because you get tax free benefits when somebody dies and you get to inherit their house and investment properties, mutual funds, etc. Guess what? When you liquidate that stuff and you spend that money, you're going to get taxed.
Well, the other thing he doesn't talk about is that it's those other things are generally not. You have no idea what the value of those mutual funds is going to be.
No.
What if the market had tanked 30%? Or in the value of the mutual funds goes down, or the value of the homes goes down, whatever. Like, there's all these. The value of the whole life product never goes down in value. It increases in value every single year.
Yeah.
So
Guaranteed appreciation.
guaranteed. Like, so
Yeah.
yeah, that's a short. That's a
Plus,
weak.
you
That's a
want
weak one too.
that's very weak. Really, really weak.
This next one is kind of
Yeah.
uh,
Yeah,
partial surrender, tax free, first in, first out.
Yeah, it's because you've already paid taxes on the money because it's not a qualified plan, which is great.
Oh, he did say that's a nice feature of whole life. So that's
Okay,
he's throwing
there
us,
you go.
throwing us a
Boom.
bone there. Yeah.
But he talks the tax benefits you don't get. There's no deduction
Oh.
for contributing. Good, because it's not. That means it's not a qualified plan.
That's a good thing. I look at that as
That's the same thing as saying there's no government
positive.
control.
Yeah, I look at that as positive. But hey, I want to go back to that partial surrender. Keep in mind, again, he's showing his hand here that he doesn't understand. Doesn't understand IBC, of course. Doesn't understand. I would never do a partial surrender.
No, me neither.
I know that's like a conventional way to think about it, but I would never do that. I would just use loans, policy loans.
Just use
definitely.
loans. Never be taxed on anything, and you'll always have
Right.
somewhere to put money back into if you want to.
That's right. Yep.
Yep.
Okay.
So, I mean,
These are all
there's
tax things like
they're all tax things that are, the interest is not deductible. Oh, this is a big one. I mean, if somebody takes this at his word and doesn't investigate it themselves, ooh, they're going to be in for a rude awakening. He said, yeah, you can borrow tax-free against your policy cash value, but those terms are often unfavorable to you, and the interest isn't deductible like borrowing against your house or your investments. Really?
how are the borrowing terms unfavorable?
He doesn't know. They are not unfavorable. You control every single term except the loan interest rate.
Right.
And that
Which will
loan
never
interest
be
rate, you
higher
can
than
bet, is going to
8.
be smaller than anywhere else you can get a loan.
Yeah, if you can find me a loan that you don't have to repay every month at 5 to 7%, give me a call. Put it in
Yeah.
the show notes, put it on a YouTube comment or something, because I'd love to see where you're getting this thing. Right?
Yeah.
It's the most favorable borrowing position one could find themselves in.
Yep.
Ever.
And the fact that you cannot borrow against your house and write off that interest unless you meet certain criteria. Like it has to be
Correct.
used for home renovation or something to do with your home, your
Correct.
primary residence,
Home
right?
improvement. Yep.
And it's got
Correct.
to be like underneath a certain value. Once you exceed that, then you can't write that interest off anymore.
Correct. Yep.
So, yeah, that's just bad, bad advice.
Yeah, it's pretty sloppy. The AI didn't do a good job on this one.
Right. Number 7, negative returns. What does Nelson say about rate of returns and infinite banking?
This is not about rates of return. Interest rates go up, interest rates go down, but the process of banking goes on no matter what. Something like that.
Yeah, no matter what. So this is just he's not talking infinite banking here. He's just talking about the product. If you want to talk about the product, yeah, of course, you're not going to have access to everything you put in for a number of years because you're buying permanent death benefit.
You're buying life insurance, right?
You're buying life insurance, so you don't get anything for free.
Yep,
But
correct.
he's also confusing life insurance with investing. Well, hey, do you get negative returns in the stock market?
All the time.
All the time. Yeah, sure you do. You get positive returns? Sure. Yep. And, he ends that paragraph with, no, it's not a good investment. Agreed.
Agree.
Life
Concur.
insurance is not an investment.
Nope.
We agree on something. Well, I guess then number 8, reason why whole life insurance sucks is low return. So again, back to the terms or the returns, looking at,
Yeah,
it's not an investment vehicle.
it's not an investment. He's doing an apples to oranges comparison. I think the proper comparison would be a dividend paying whole life insurance policy against your typical savings account,
Yeah.
which they look fine right now. They looked fine for the last 12 to 24 months when interest rates have been raised. But when those interest rates go back down, you have to put the money at risk in order to make a return on it because your savings account is going to be paying 0.10% per year,
Yeah.
which is nothing.
Right.
Which is
Now
no
it's
money
not so
at all.
bad, 4 to 5%.
Yeah, 4 or
you can find.
5%. Great.
So great. But it's going to go back down again. Everything goes up and down.
And that's kind of what I like about participating whole life is that it doesn't move a lot regardless of what Fed policy is. It's kind of like in that 3 to 5%. And I don't frankly care, and it's not taxed, so there's that value as well. But I don't even think about the internal rate of return. I don't ever.
No, me neither.
I don't care. It is.
He does make a good point. I will point this out that the dividend rate, people mistake the dividend rate for the rate of return. And that's how I think some agents, some unscrupulous
they do.
agents, well,
Yep.
hey, our company has a 7% dividend rate. And then people just automatically assume I'm getting a 7% dividend every single year. That's amazing.
Why-
Without,
Oh my God.
oh my God, that's incredible. And I can access it tax free. That's not the case. So the dividend rate of a company, the actual number means less to me than the trend of that number.
Right.
So is the number trending up over the last 4 or 5 years? Is it trending down? Where does it lie historically? Because that number really, you cannot correlate the dividend rate with how much cash comes back to your cash value every year.
Right. It's just a gross dividend rate that's declared, and it's mainly used for marketing. There's some mutual companies, Dave, that don't even publish their dividend rate.
Yeah.
It's not disclosed. So, again, I think you nailed it, though. As long as it's trending in the right direction and I receive a dividend,
And
that's all
as
I
long
care
as
about.
there is a dividend, right?
Yep, that's all I care
that's
about.
the
It means
most
the company's
important thing.
profitable, and that's
Yeah.
what I care about.
Do they have a 100+ year track record of paying dividends? That's
They have a
important to me.
divisible surplus.
I like it. All right. The cost of insurance rises. So this is funny because he says
This is where we have common ground.
we have common ground, but for some reason, this article is about whole life insurance, yet he puts this there. The cost of insurance rises, which is completely false. Whole life insurance
Right.
cost does not rise. It decreases over time.
Yep. The only thing I would say is, like, if you currently own whole life, your premiums are going to be fixed and they will decrease over time to
Yeah.
ride that mech line into until the policy's paid up or you graduate. But yes, but when you age, like the difference in price on death benefit for any insurance policy, term universal or whole life, the price between a 40 and a 50-year-old, the 50-year-old is going to pay more for $1,000 of death benefit than the 40-year-old. All things being equal, health wise and stuff.
Sure. Once that policy is enforced, it won't rise.
Right. That's
But
right.
so he even admits right away, this one is technically not about whole life insurance where the premiums are guaranteed, but about its cousin, universal life insurance. I would call it its inbred cousin, because that's really what it is. It's an inbred cousin playing the banjo on a doorstep in the Appalachians. That's what IUL is, or universal life insurance.
Universal life. Yep, universal life. We actually just had a client that surrendered 2 of her policies to go buy universal life.
Oh my goodness. Yeah, I know, right?
That is
she'll be surrendering that at some point too. Guaranteed.
Yep, no question. Yep.
Oh, it's a shiny nickel.
No understanding. Right.
Yeah, no understanding. If you need more about universal life, we have a whole episode on that early on, like, I don't know, episode 15 or 20. It's in the first 20 or so.
Yep.
We're not going to elaborate on universal life insurance.
Yep. I don't own any, and I've never sold a policy, and I will never sell one.
Although we've talked to many people who do own policies and have owned them for a number of years and had decided to let them go, surrender them.
Yeah, they look terrible.
They're awful.
Every
the
single
older you
one I
get, the
see.
worse it gets.
The oldest one I saw was on like a 45-year-old guy, and it was the policy itself was 12 or 13 years old. He was still upside down.
Really? I had a guy do a 1035 who had owned one for I don't know how many years, maybe 10 or 12, and it was positive. So we 1035'd it so he could transfer that cash without any tax implications.
Yep.
But the reason he did it is because he saw what was coming down the road.
Yeah.
He said, hey, there's no guarantees in this past a certain age, and I know what's coming down the road because I understand it better now. I'm going to get out while I'm ahead.
Yep. Rising cost of insurance as you age, folks.
Yeah. Not fun.
Nope.
And then number 10, the 10th reason why whole life insurance sucks, according to this guy, non-qualified investments aren't that bad. So, so they're not that bad. Okay, interesting. Well, I guess where you come from, if somebody says, well, it wasn't terrible, that means it's really
not
good.
terrible. Yeah.
I guess only people on the East Coast would understand that one, huh?
Yeah.
Yeah. So, for many docs get suckered into buying whole life insurance because they don't know where to invest more money for retirement after maxing out their 401k. How many doctors can still, they can't do a Roth IRA, so they got to do the backdoor Roth because they make too much money, right?
Correct.
So if you invest tax efficiently, hyperlink, using total market index funds, hyperlink, click on these links to go to our affiliates where we will get paid. Actually, what does it say? If you go to the term life insurance quotes, click, clickbait down here.
It says that we'll get paid.
Yeah, it says at the bottom there that, White Coat Investor LLC will, may be on the commission statement and get paid part of the commission from selling you this product. So,
the irony of his first paragraph here, all these things he's listing, like the backdoor Roth for high income earners, whatever, the HSA, whatever, all these things you're listing. If you and I wanted to, we could still do all that.
True. There's nothing preventing you from doing anything he recommends here.
Correct.
In addition,
and again, they don't understand sequence, right? They don't understand the product. And let's face it, a lot of people buying whole life and selling whole life don't understand infinite banking concept either, or the way we think about money. So I get it. This is not really poking at us, but it kind of is in a way, because, hey man, you're putting out information that would partial truths because you don't know the other side of the story. Yeah. You only know the conventional life insurance agent, how they do things. You don't know the Nelson Nash way. Yeah, right.
So, and I will give him some credit here at the opening, right before he goes into the 10 reasons why he hates it. He says, I don't have a problem with you buying whole life insurance or even with the product itself, really. If you really understand how it works and you want it, then buy as much as you like. My problem is with the way the product is sold.
Yeah.
And I agree. There is, it is sold really, really poorly.
Black eyes are earned in any industry. Doesn't matter what it is, but in the life insurance industry, the black eyes have been earned, and we've seen it, right? We've seen you had an experience with an agent recently that was trying to replace a policy you had sold to somebody and educated them on with another one.
That was nearly the same.
Nearly the same from
just brand new.
My opinion, inferior company.
Yeah. So
anyway.
Right. There are some very unscrupulous actors, but you know what? It's really the way they're trained. Because,
Yes.
Another reason we really don't, you don't see IBC guys writing policies for some of the biggest companies in the country. Because to be an agent at one of those companies, you're essentially captive. You can only sell their products, and you're trained by them in the way they want you to sell. And it's kind of sad. It's sales.
We don't use any of the big four generally.
No.
We have contracts with one or two of them, but we don't generally write their policies.
Yeah. And I don't sell anything to anybody.
Nope.
No, I educate you. In fact, that's a requirement. To work with us, you have to be educated. You have to have read the book. You have to have listened to the podcast and come with a good, solid foundational understanding of what this is. Of course, there's a lot of unanswered questions, so there's always going to be more learning. But unless you're educated, we don't want to offer this concept to you.
Correct.
Because what happens when somebody gets into this and they're not educated? Well, like we just saw a few years down the road, they give up something that's very good, they surrender it, and they go to something that's really bad.
Yeah, it's and despite our counsel, people are going to do what they're going to do.
Yeah,
and it's rare, but it did happen. So
yeah, and I blame us for that, frankly, because we allowed this person to purchase policies like 3 or 4 years ago, where we didn't ensure that they were fully educated. I mean, we told them, hey, you need to read this book, you need to do that, but did I really ensure that they had done all that stuff and met those requirements before I moved forward? No, I kind of got talked into doing it because she really, really wanted it. And she, thought this was a great thing. Okay. And that's why we've changed up our processes over the years, because, the only way to lose is to quit in this.
No doubt. You can't say it any better than that.
Yeah.
Why are our clients and us and other people we know in the business always trying to buy more whole life insurance?
Because they see the value in it.
And then you have the complete opposite. It's quite amazing. When you know, you know.
When you know, you know. Yeah. So I think it'd be fun to go through a lot of these comments down there, but I just don't have the time or care to, because you get a lot of.
Oh wow, there's a bunch of
a lot of comments. You can learn a lot from the comments section.
Yeah.
So, it's maybe worth a read if you guys want to go check out this article yourself on the whitecoatinvestor.com. 10 reasons people regret buying whole life insurance is the name of the blog. So, but, again, I would summarize this by saying you should be talking to biased professionals in every industry. If you're looking to put your money to work, talk to somebody who's a real estate investor and why they're biased in that. Talk to somebody in whole life insurance, why they're biased in that. Talk to somebody in the stock market, why they're biased in that. And then maybe do all of it, or maybe just do one of it. But you'll get a biased perspective that'll give you a lot more clarity than a quote-unquote unbiased advice, which I don't think exists, frankly.
Well, I think IBC advice from our lens is the most unbiased, because we're still encouraging people, hey, listen, this is less about this or that and more about sequence. Where you put your money first matters.
Yeah.
Still go do all that, but put your money here first.
Yeah.
It's really quite simple.
Right. I think it's funny, just that somebody writes an article, saying you should go talk to somebody who's unbiased, and then they write a very biased article.
Yeah, that's good.
That just proves my point. Proves my point. Everybody is biased.
Everybody's biased. Yep.
So,
No question.
like it, love it or hate it, but that's human nature. That's who we
Yeah,
are.
I mean, I suppose I'm wicked biased toward IB's, the process of becoming my own banker.
Yeah.
Very biased toward it.
Now, I'm not biased that it's right for you necessarily, unless we've had a chance to talk and you're educated. But
Right.
it could be right for you.
Yeah, I generally think it's right for everybody, just at all income levels, all professions. Just don't quit.
Yeah. Don't quit. Make a commitment. Just like marriage, make a commitment, stick to it, and till death do you part. That's you'll get the most out of whole life insurance if that's the way you view it.
And with that said,
With that said, we'll let you guys get back to your week. Have a great week. We'll talk to you next week. Until then, control your capital.
or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.